Hello and welcome to the breaking news. My name is Muhammad Nazrin bin Ishaq and my matrix number is 294598. We are from Group 5. Right now, we will explore into the Malaysian banking industries, a sector that plays a crucial role in the nation's economy. To begin with, this industry is dominated by key players such as Maybank, CIMB, Public Bank, RHB Bank, Hong Leong Bank, Alliance Bank, and Bank Simpanan Nasional. These institutions offers a wide range of services including retail, commercial, and investment banking, making them crucial to the financial landscape of Southeast Asia. Moving on, the Malaysian banking industry operates within an oligopolistic market structure. In other words, a few major banks control a significant portion of the market. For instance, Maybank, CIMB, and Public Bank alone account for over 60% of the market share. Interestingly, these banks rely on strategies like digital banking and product differentiation to maintain their competitive edge rather than competing only on price. Furthermore, smaller banks such as Hong Leong Bank, Alliance Bank, and BSN sustain to niche market and specific customers' needs. However, new entrants face significant barriers including strict regulation and substantial capital requirements set by Bank Negara Malaysia, the country's central bank. As a result, the market remains highly concentrated, with the top bank holding assets ranging from 60 billion to 1 trillion ringgit, while smaller banks have assets between 16 billion ringgit to 116 billion ringgit. In addition, the banking sector serves a diverse customer base with over 19% of Malaysians having access to financial services. From individual retail clients to large corporations, banks offer a variety of products, including savings accounts, personal loans, and credit cards. Moreover, corporate clients benefit from services like business loan, trade financing, and investment banking. Another key point is the industry's focus on digital transformation. In recent years, banks have invested heavily in online and mobile banking platforms to enhance customer experience and accessibility. For example, CIMB and Holion Bank have significantly upgraded their digital services, reflecting the industry shift toward technology-driven solutions.
Hi everyone, my name is Naliana binti Mahathir and my metric number is 298359. Today we dive into an essential aspect of Malaysian banking industry, which is pricing policy. This strategy plays a crucial role in shaping competitiveness and targeting specific customers. Let's begin with floating rates loans. Malaysian banks employ dynamic pricing strategy to respond to market conditions and regulatory changes. Here is a closer look. Base rates or BRs range from as low as 1.75% offered by Maybank to around 3.60% for banks like Hong Leong and Alliance. When profit margins are added, the effective loan rates emerge. For example, Maybanks offer an effective rate of 3.95% with profit margin between 1.25% and 1.45%. Public Bank presents a competitive rate of 3.47%, attractive specific customer segments. Meanwhile, RHB and CIMB provide flexibility with rates between 3.75% and 4%. Additionally, some banks focus on specific groups. BSN targets civil servants and low-income earners with tailored schemes and lower rates, reinforcing financial inclusion. Now, let's turn to credit card pricing, another area of intense competition. Banks tailor strategies to match diverse customer preferences. Annual fees range from RM35 to RM800, with interest rates typically between 15% and 18%. Alliance Banks breaks the mold, offering a lower interest rate starting at just 9%. Special offers also make a difference. RHB and Hon Leong reward dining, shopping, and also travel with higher cash rebates. BSM provides government employees with zero annual fees and other inclusive intensive. A significant development in industry was the introduction of standardized base rate or SBR by Bank Negara Malaysia in 2022. By linking floating rate loans to the overnight policy rate, the SBR ensures transparency and improves customer protection. At the same time, it allows banks to remain competitive. In summary, Malaysian banks are striking a balance between competition, customer-focused strategies, and regulatory compliance. Whether it's through innovative loan schemes or tailored credit cards offers, these pricing policies underscore the bank's adaptability to market demands and regulatory expectation. That's all from me. Thank you. Good day everyone. Today we dive into the innovative world of digital banking in Malaysia, where leading financial institutions are revolutionizing customer experiences through cutting-edge and apps and services. Let's take a closer look at how these banks are transforming our daily interactions with money. First up is Maybank with their popular app MAE by Maybank to You. This app combines traditional banking with lifestyle enhancing features like target saving through double, automated expense tracking, and even food discovery. A standout innovation is Maybank's sustainable product framework, a first in Malaysia promoting green and socially conscious financial solutions. Next, CIMB introduces us to CIMB Auto, their reimagined mobile banking app. Built with advanced technology, it offers a customizable interface, biometric security, and quick access to key services like Duitna QR payments. CIMB also continues to lead with structured products tailored to investors' unique goals. RHB Bank brings convenience to future homeowners with the RHB My Home app, allowing instant access to home loan details and approvals. Their mobile banking app also impresses with an intelligent dashboard and a quick pay features for hassle-free transactions. Hon Leong Bank's HLB Connect mobile app allows seamless management of accounts and card-related services. It empowers users with the convenience of applying for loans and credit cards directly through the app. Alliance Bank's Alliance online app introduces innovative features like smart reminder for timely payments and mobile secure approval, ensuring transaction security through personalized tokens. Finally, BSN's My BSN app integrates user-friendly banking with fund transfers and financing options, while their Kasih Bakti Plus insurance plan offers comprehensive coverage from daily hospital benefits to accidental death benefits. So today we have someone that we want to interview regarding Bank in Malaysia. So I have a question for you. In your opinion, how Malaysian banks are improving their products and services?
Malaysian banks are improving by using advanced apps supporting eco-friendly product and running handling to help customer and business. This makes banking easier, greener, and more rewarding.
Thank you. So that wraps up our interview. Now back to the studio. Thank you. So with this groundbreaking innovation, Malaysian banks are setting new standards in digital banking and customer satisfaction. Stay tuned as we continue to bring you stories of progress and innovation. Thank you for watching.
Now we continue with me. I'm Muhammad Fahmi bin Makrus. My metric number is 296229. I will bringing you the latest from the banking sector in Malaysia. Let's dive into some exciting campaign making wave in the industry. Maybank leads the charge with its Maybank to You digital transformation campaign, which enhanced digital service like QR payments, spending trackers, and virtual debit cards. The initiative aims to offer a seamless, personalized experience. Maybank has been recognized as Asia Pacific Best Consumer Digital Bank for 2 years in a row, aiming to engage 80% of SME with digital service by next year. Maybank is staying ahead in the digital banking race. Next, CIMB is supporting SME through its SME Quick with Financing campaign, offering loans of up to 1 billion with same-day approval. The campaign promised minimal paperwork, affordable interest rate, and collaboration with government schemes to make business expansion easier. Meanwhile, RHB Bank has launched its Together We Progress campaign, focusing on supporting SME and underserved population. Now we move to Public Bank. Public Bank is also targeting SME with its general SME financing option and is heavily investing in digital media to attract a younger tech-savvy audience. They are also promoting financial literacy through their CSR initiative alongside providing a solid customer service. Holion Bank is offering its Visa cardholder a chance to win a trip to the 2024 Paris Olympics. Customers can enter a draw by making qualifying purchase with Samsung Electronics as consolation prize. The bank is also running the Suara Suara Raya campaign, collaborating with local artists to mark Hari Raya and create a festive atmosphere. In a big move for startup, Alliance Bank is expanding its Bismarck Challenge. The program provides funding, mentorship, and access to digital solutions for SME with turnover up to RM 40 million, helping business move competition and grow. Lastly, BSN is making wave with two major campaigns. The Pengacau Raya Cina campaign celebrates Malaysia's multicultural identity and has garnered over 2 million views. Additionally, the SSP campaign, a Sharia compliance saving initiative, offer up to RM 1 million in prize, with a viral ad touching heart through the story of a father's sacrifice. That wraps up tonight banking news update about advertisement. This campaign highlights the industry ongoing digital transformation and strong support for SME and diverse communities. So that's all from me. Now we move to the next announcer.
In today's financial news, we spotlight the remarkable growth of several major Malaysian banks over the past decades. Malay Bank has seen its total assets rise from 342.6 billion in 2012 to 522.7 billion in 2022, reflecting its commitment to regional expansion and digital banking. CIMB Bank experienced a significant jump from 336.5 billion to 666.7 billion during the same period, driven by strategic regional expansion and digital transformation, particularly between 2018 and 2022. Public Bank increased its assets from 274.6 billion to 493.3 billion, showcasing stable growth through effective financial management and strong customer service. RHB Bank's asset grew from 169.7 billion to 310.8 billion, fueled by reforms and partnership in corporate banking. Hong Leong Bank expanded its total assets from 140.3 billion to 198.1 billion, focusing on customer-centric services and technology investments. Alliance Bank reported growth from 32.8 billion to 47.5 billion by targeting niche markets and improving operational efficiency. Lastly, BSN's asset increased from 25.3 billion to 46.6 billion, driven by efforts to broaden retail banking offerings and enhance accessibility for customers. These figures highlight the resilience and adaptability of Malaysia's banking sector as it embraces digital innovation and customer service. Next, we remove to the revenue. Maybank increased its revenue from 15.7 billion in 2012 to 21.6 billion in 2022, driven by a digitalization and regional expansion. CIB Bank saw its revenue rise from 13.5 billion to 17.8 billion, with growth influenced by regional expansion and digital initiatives, despite some instability between 2018 and 2020. Public Bank achieved steady growth, increasing revenue from 10.4 billion to 14.9 billion, thanks to a strong customer base and conservative financial practices. RHB Bank's revenue grew modestly from 6.2 billion to 7.4 billion, supported by improvement in consumer and corporate banking. Hong Leong Bank experienced minimal growth, with revenue rising slightly from 5.4 billion to 5.5 billion, maintaining competitiveness through a customer-first approach. Alliance Bank reported an increase from 1.3 billion to 1.7 billion, focusing on small medium-sized enterprises. Lastly, BSN's revenue declined from 699 million to 520 million, despite growing assets as it continues to enhance retail offerings. This development illustrates how Malaysian banks are navigating economic challenges while pursuing growth through innovation and customer focus. Now, we focus on the concentration ratio of Malaysia's banking sector and the performance of its leading banks over the years. The concentration ratio stood at 85.97% in 2012, indicating a highly concentrated market dominated by the top four banks, namely Maybank, CIMB, and Public Bank. By 2013, this ratio increased to 86.46%, with Maybank leading revenue growth at 16.3 billion and assets reaching 397.8 billion. The trend of consolidation continued, with the concentration ratio rate climbing to 87.08% in 2014 and 87.35% in 2015. Maybank reported revenue of 19.8 billion, while public banks' assets grew to 363.8 billion. By 2016, the ratio reached 87.42%, reflecting stable revenue growth across major banks, with Maybank's asset at 496.1 billion. In 2017, the concentration ratio further increased to 88.06% as Maybank reported 22.1 billion in revenue, solidifying its market leadership. In 2018, the ratio dipped slightly to 88%, but revenue growth remained consistent across the board. By 2019, it rose again to 88.35%, with Maybank leading at 25.1 billion in revenue. The pandemic impacted the sector in 2020, causing the concentration ratio to drop to 87.12% as banks adapted to economic challenges. However, by 2021, it increased slightly to 87.26% as banks focused on digital transformation. In 2022, the concentration ratio surged to 88.91% as major banks rebounded post-pandemic, with Maybank reporting 21.6 billion and CIMB 17.8 billion in revenue. As of now, January 14, 2025, Maybank remains Malaysia's largest bank with assets of 452.6 billion and CIMB at 414.2 billion, reflecting their strong positions in a highly consolidated market. These figures highlight the ongoing consolidation and resilience of Malaysia's banking sector amid evolving economic conditions and strategic adoptions by leading banks. That's all from me. We move to the next reporter.
The government regulates monetary policy to ensure the economy remains stable and resilient against both short-term disruption and long-term challenges. Regulation is essential for controlling the money supply and interest rate in a structured and deliberate manner, helping to prevent excessive inflation and mitigate economic crises. Without such regulatory oversight, monetary policy could become inconsistent, leading to market volatility and uncertainty. By maintaining price stability through clear inflation target, regulation fosters an environment of predictability that encourages business and consumer to plan and invest confidently. Currency stability, a key focus of monetary policy regulation, ensures the domestic currency remains competitive and reliable. In Malaysia, for instance, regulatory decisions to stabilize the ringgit during period of depreciation reflect how oversight helped protect the economy from adverse external pressure. This stability not only reduces transaction costs and exchange rate risk, but also bolsters international trade and investment. During economic downturn, regulation ensures monetary policy interventions such as lowering interest rate or increasing the money supply are carefully calibrated to stimulate borrowing, spending and investment without triggering long-term imbalance. Such regulatory measures benefit the financial services sector by increasing demand for financial products, enhancing transactional volume and reducing default risk, which in turn improve the profitability and stability of banks. Regulation also fosters confidence in the financial system by ensuring that monetary policy decisions are transparent, consistent, and aligned with macroeconomic goals. This trust attracts both domestic and foreign investors, further supporting economic growth. Moreover, regulatory oversight requires financial institutions to monitor income sources and systemic risks, reducing vulnerabilities to sudden macroeconomic shifts and ensuring resilience. In conclusion, the regulation of monetary policy is indispensable for maintaining economic stability, promoting trust in financial system, and ensuring sustainable growth. By establishing a structured framework for monetary decision, regulation provides the stability and predictability necessary for the economic and financial institution to thrive. In your opinion, is monetary policy sufficient on its own to achieve common objective, or does it require stronger integration with fiscal and structural policy?
In my opinion, monetary policy alone is insufficient to achieve comprehensive government objectives, as it primarily addresses short-term demand sides, demand side issues. So, sustainable economic growth requires integrations with the fiscal and structural policies. So, fiscal measures such as infrastructure spending and tax policy complement monetary policy to targeting supply side development. For example, supply side changes and also fostering long-term development. So, for example, in Malaysia, there is a bank, Negara Malaysia (BNM), that uses monetary policy for currency stability and also inflation control, while the government implements fiscal measure which is subsidies and developments that address structural issues and protect the economic growth.
Okay, thank you. Monetary policy is a powerful guiding tool to achieve comprehensive government objective. It must be integrated with fiscal and structural policy. Coordinated effort ensure that economic stability, sustainable growth, and social equity are addressed holistically. Government and central bank must maintain close collaboration, especially during time of economic uncertainty, to achieve the best outcome.
The World Bank defines competition policy as governance rules to promote fair competition and stop practices like monopolies and price fixing. The goal is to create fair markets, encourage innovation, and protect consumers. In Malaysia, the Malaysia Competition Commission or MYCC enforce competition rules under the Competition Act 2010. According to MYCC 2024 report, these policies have improved economic efficiency by ensuring fair prices and stopping unfair practices, especially in the sectors like telecommunication and financial services. In financial services, competition policy helps smaller banks compete with the big ones, preventing monopolies, and it also encourages innovation like the rise of fintech companies, which push banks to improve their digital services and offer better financial products for customers. Competition policies also reduce risks to the financial system by ensuring no single institution becomes the dominant. This makes the banking sector more stable and better prepared for economic challenges. However, experts like the IMF warn that too much focus on competition without proper regulation can lead to problems like poorly priced financial products or weak compliance with the rules. In short, competition policy helps the financial sector grow and innovative while protecting consumers, but it needs strong oversight to avoid potential risk. In Malaysia, macroeconomic policies play a vital role in maintaining economic stability and supporting the banking and financial sectors. Fiscal, monetary, and exchange rate policies work together to influence how banks operate and adapt to economic conditions. Fiscal policy, managed by the government, affects public spending and taxes. During economic slowdowns, increased government spendings like infrastructure projects boosts demand and creates opportunities for banks to lend more to business and households. Conversely, during period of economic growth, the government may cut spending or raise taxes to control inflation, which impacts bank lending and interest rates. Monetary policy led by Bank Negara Malaysia or BNM directly influences borrowing and investment. Adjusting interest rates is a key tool. Lower rates make loans more affordable, encouraging borrowing, while higher rates slow down borrowing and economic activity. Exchange rate management is also critical in Malaysia's trade-driven economy. Fluctuation in the ringgit's value affect the cost of imports and exports. Banks engaged in the trading financing closely monitor exchange rates, as a stable exchange rate minimizes risks in international transactions.
Together, these policies ensure a stable environment that supports financial growth. However, maintaining this balance is crucial to help banks remain resilient during economic uncertainties. The ability of banks to adapt to fiscal, monetary, and exchange rate changes is essential for driving stability and growth in Malaysia.